And the new spending proposal from Senators Chuck Schumer and Joe Manchin is dubbed the Inflation Reduction Act. But will it actually reduce inflation? There are many components to the bill. We'll talk just about a couple of them. Schumer and Manchin say the bill would reduce inflation through reducing the federal debt budget by putting a 15% minimum tax on corporations. This 15% minimum is also called a book minimum tax, though not everyone is convinced that it will help inflation. According to Moody's Analytics, the bill would only lower the CPI by 1/3 of a percentage point by 2031. It's almost a decade from now. Here to talk to NTD's Don Ma about the bill is William McBride, the Vice President of Federal Tax and Economic Policy at the Tax Foundation.
Will, thanks for coming on. So just tell us a little bit about Chuck Schumer and Joe Manchin's, Reduce the Inflation Act. Now, would it actually reduce inflation?
That's not at all clear. Inflation is a very complicated subject, and it's not as simple as reducing the deficit for 1 or 2 years in the immediate term. It's really more fundamentally about economic growth. It is a negative for the economy over the long run, and that is primarily because of the book minimum tax on corporations, and that would reduce incentives to invest for large corporations in the U.S., reducing the productive capacity of the economy. And so it's not at all clear, even on that basis, that the bill would have any kind of negative impact on inflation, and more likely it would worsen inflation.
So right now, the general consensus for the environment of inflation is that demand is outpacing supply, right? So will raising taxes increase supply or reduce it?
Well, these particular taxes, and particularly the tax on corporate book income, will reduce supply. That's a tax. Those are the suppliers. Those 150 companies, they are big suppliers in the U.S. economy, big producers, and so they cover the gamut. All sorts of industries, all sorts of goods and services are produced by those companies. They would have less incentive to produce those things. And so, yes, supply goes down.
I see. So what you're saying is this would actually make inflation even higher.
Absolutely. Now, the magnitudes, again, it's small on both the tax revenue and the spending side. So this is a much scaled down bill compared to what was being contemplated last year, and Build Back Better. It probably has a pretty negligible impact on inflation, but the direction is probably to make it worse.
William McBride, Tax Foundation, thanks for your time today.
Okay, thank you.